and welcome to ATFX's Bank of England interest rate preview. My name's Nick Twidale, and as always, we're going to give you a bit of insight into what's going on with the Bank of England, have a quick look at the cable chart and see if there's any opportunities out there for traders in foreign exchange. So it is a fascinating week for cable traders this week. The Bank of England potentially could be cutting rates. Now, the market's only pricing in about a third of a chance, 33% chance that we will see a rate cut this week. But pressure is on the MPC through poor growth numbers. So GDP is struggling a bit and jobs numbers, unemployment numbers are high. But of course, we've still got that really sticky inflation in the UK. Year on year coming in at 3.8%, still too high for everyone's liking and much higher than most of the other developed nations. Now, last time out, we did get a lower print than expected on the CPI number. So inflation is coming back, and that has opened up that possibility that we could see a rate cut from the bank. Now, we do know that the MPC is split, and we're going to get an interesting new reporting this time out with more detail on what's coming through, which could make the reaction even harder than it normally is. But guidance from Governor Andrew Bailey at the moment is, and most of the market kind of is coming in along the lines that we will see a hold at 4%. If we do, we're then looking ahead as well to see what budget we get from the government, and it's probably going to open the way for a cut in December. But that 33% is still a high chance for some people out there. A few of the bigger banks have called it in the last few days that they think that the MPC will go. They think concerns on growth, concerns on jobs will outweigh that persistently sticky inflation, and we could see a cut from them. So what we're going to do now is we're going to go and have a quick look across our cable chart and see what that could mean for sterling in the coming days, sessions, and even weeks, because it's probably going to put a little bit more downside momentum on a move that has already come a fair way, let's be honest. So we're looking at the cable chart here, and as you can see, a decent move down that we've seen since those highs that we got kind of in mid-September all the way up, and this is resistance level now, all the way up at 136. So we're way down at 131.21. We are on sort of multi-month lows here. We haven't seen these levels since way back here. Now, partly that's to do with sterling weakness, but a big chunk of it, especially over the last few days, has been that change of guidance, I suppose, that we got from the Fed. We got the cut from the Fed last week, but it was really seen as a hawkish cut from many. Data coming out the US at the moment is, of course, non-existent due to the shutdown. Jerome Powell reflected on that. They're still concerned with inflation. Some Fed members, similarities across most central banks are quite strong at the moment. Concerned, a rock and a hard place for many people, but the Fed, there's still that concern with inflation, although jobs are obviously weighing. We don't know where the jobs are from the US. So that's helped to drive cable to these lower levels. Now, that interest rate differential could increase massively if we get that cut from the MPC on Thursday. And especially if we then get further indication of more cuts pending. So we've had a good break. I've left that support trend line that came in around about the 132.50 level. A good break there. It was a double level. We had a support trend line and we had the 200-day moving average. It's moved down there, decent 100 points. And now we're kind of consolidating just above 131, the figure. As you can see there, the low was 130.94. Cable traders looking for that next catalyst to take us into a fresh range. Now, of course, if we don't get the cut, and that's highly anticipated, it's going to go on the votes that we get from the MPC, how tight it was. If it was tight and it's expected to be tight, we may see a bit more downward pressure on cable. If we do get the cut, I expect it to open the way for a move to 130 and even further fairly swiftly. If we don't, we could see a little bit of a relief rally. Obviously, there will be a bit of this cut priced into the market. There's 30% chance, according to futures at the moment. I would expect resistance to come in on this previous support line. So that's now 132.80. As you can see, the 200-day, it's a double whammy again on the way back up, 132.50. So I expect that to initially stop things, especially if it comes out kind of as expected. We don't get the cut. And there's a very big split in the MPC. if we do see a more dovish leaning from the MPC, to be honest, if we do see a more dovish leaning from the MPC, from members, will probably get that cut. But if it is a dovish hold, expect this move to grind lower and move down and open the way for 130. As I said, the cut could open the way all the way down to support relatively swiftly down here at 127.15. So plenty of action expected in cable and, of course, in sterling crosses around this event. But it really will come down, and it is a live event now. I think that's the important thing. Most of last week's, we got some big central bank calls last week. They weren't really live. We knew we were going to get a cut from the Bank of Canada. We knew we were going to get cut from the Fed and holds from the Bank of Japan and ECB. So a lot more emphasis, I think, placed on the Bank of England this week. It is a live meeting, and cable especially as well, because we have seen some good moves in the dollar. There are some question marks ongoing, but this will be a solid fundamental reason to trade sterling. So plenty of opportunities coming up on Thursday. I think it's due around lunchtime in the UK. So massive opportunities for moves. If you need anything from us at ATFX, please do let us know. And if you haven't already, do subscribe to the channel. We'll keep you updated with everything that's going on in FX and financial markets. Thank you very much.